Thank you very much for joining me on the InsurTechTalk. Great to have you on the show.
Thank you, Gilad. Thank you for having me here. It is a pleasure.
Usually I start with personal questions, but the most important part, how's New York nowadays? How's the weather? I know we are like what, early, mid-May?
Yeah, it's a cool summer this year. It's a change of pattern from the last many years when the summers had been trending warmer. But this summer, we're still need my jacket every morning.
Is it summer already? Isn't that in June?
It is, but this May feels colder than last couple Mays.
Okay. Now, New Yorkers, we need to ask the most important questions. It's like, what's your favorite pizza? And how do you take your bagel?
Favorite pizza is a really hard one. I really like Ruby Rosa, but I haven't made it downtown in a while. So, but all New York pizza is great, in my opinion, in my humble opinion.
That's the best answer. That's like the best answer that one can give on. The only other thing, it will be deep dish versus, but yeah, we are not going there.
Good. And then bagel, I mean, I think cream cheese and salmon is my go-to.
Very, very plain or everything. Let's talk about insurance. It's important to ask these questions, especially from a New Yorker. But let's jump directly into it. Parametric insurance versus traditional insurance. What do you think?
So, parametric insurance, when we started, was an extremely niche, small part of the market. And over time, it has grown substantially, not just in size, but in the number of applications. Why? Because, in many cases, the gaps in traditional insurance coverage have been growing across property, crop, energy, lots of climate-sensitive areas, which is where we focus on.
Let's stop for a second. Let's pause it. You're already jumping to my follow-up questions. Let's take it one step back and let's start with Arbol. What's the background of the company? What do you guys do?
Yeah, so I came from Wall Street. I was a commodities trader and quant for many years at a number of different hedge funds. And prior to that, interest rates and macro. So not an insurance background. Neither were my co-founders. We started Arbol in 2018 with an eye to broaden the adoption of parametric insurance. That came from a need to help clients reduce weather risk, climate risk in different parts of the economy where these gaps were growing. Whether it was where we started in crops and we grew to cover energy and property markets. Many of these markets had growing deductibles, exclusions of coverage, and others. And what Parametric allows you to do is use a data set and determine a payout in an objective, transparent way, rather than an adjuster coming to your farm or business to figure out the loss. Why does that help? Because, you take out the subjectivity. You don't know what you'll get paid. You don't know how much you'll get paid. COVID spurred a lot of lawsuits in the insurance industry around what's covered, what's not covered, with very, very thick contracts. Parametric simplifies that, brings transparency. And at the same time, data sets were getting better and better. They could actually match, in many cases, what the actual loss experience was, much better than in the past. So we started as parametric insurance specialists and have grown substantially from there. And now we do both traditional and parametric across climate-sensitive areas.
Is Arbol an MGA or a full carrier?
A mix of both. We operate MGAs, we operate a property insurance carrier, we operate an MGU to cover reinsurance, where parametric have their own use cases. The common theme behind all these different mechanisms is, where are the incumbents struggling to offer coverage? Where are clients losing or facing reduced coverage? And we go into those areas, the difficult to underwrite areas. So the carrier, for example, covers coastal properties from the Carolinas down to Florida to the Gulf. We write on surplus lines other types of products like wildfire coverage in California, and we'll have more coming out later this year. And we write a number of specialty risks like crops, helping farmers cover gaps in their coverage, helping agribusinesses cover gaps in their coverage. And we operate both in the primary space, so admitted and surplus lines, as well as reinsurance to help carriers in the crops and property space transfer their risk to markets and reduce risks on their balance sheet. Yeah, lots of different areas we operate in, but with a common theme.
No, this is great. Now, I posed you earlier when I asked the general question about what's the difference between parametric insurance and let's call it the traditional insurance. And the whole idea of parametric, you have a trigger, and that once that trigger happens, you pay a known amount, which kind of saves on the adjusters and actually the entire claims process. How did you reach it? What else you can tell people who are not familiar with the whole mechanism of parametric insurance?
The thing with designing parametric products is really to get at how do you design those triggers and the underlying data so that when there's a payout, it serves the purpose, the end purpose, which is compensating a client for a loss when an event happens. So a simple example could be a farmer purchases a parametric contract that pays if rainfall data is lower than average in their specific area based on hyperlocal rainfall data. That's a simple parametric contract. You can get a little bit more complex, could be local crop yield. So how much production of the crop happened rather than just a single weather trigger. And you can further make it more complex where it could be instead of one location for a property carrier, it could be 100,000 locations. So property carrier may cover 100,000 homes. Each of those become a data point as a storm tracks through based on its wind speed, based on its track. An aggregate payout is determined, total payout for the carrier's balance sheet, calibrated to what their loss might have been in a more traditional reinsurance contract. So there's a lot of layering around. You can start simple, single location, single variable, and get more and more.
So the simple example that usually people are using, travel insurance, your luggage didn't appear. Or in crop insurance, the weather, too much temperature is classic, right? Temperature, there was a frost, that's it. All your crop or an unknown percentage of the crop kind of estimate based on past data, what's the damage, and as a result, you compensate them accordingly. Which kind of asking, how do you know? How do you know what's the adjust, or is it already set? Because if this then that, and now you're already getting into a little bit more complex underwriting, where do you get the data? How do you do your underwriting?
So we were algorithmic underwriters from the beginning. This is where there's an overlap with a lot of AI techniques that have come out in terms of how to understand, say, climate risk, not just in the window that your phone shows, which is the next 14 days, but what's the chance of a drought in this season? Or what's the chance of a heat wave in a particular area and how long it might last? So those are the kinds of things that is starting to pick up a lot in the academic world, but also we do a lot of internal research on these kinds of topics. That's the foundational layer. Another part of the foundational layer is to take the reams and reams of satellite data that come out every day about, different sources, optical, radar, many other types, and understand what is going on in the ground. What's the soil type and how dry is it? Does that have an effect on how much rain might happen, and many other layers to that? Once you combine all of that, you have a view of risk. What does a view of risk mean? It's not whether, frost is going to happen or not, or a heat wave is going to happen or not. It is, what is my expected distribution of outcomes? And that that then drives what do I need to charge for this product so that it is actuarially or risk-wise profitable. And so there's layers to the underwriting. Complexity varies obviously quite a bit because, again, you can have a few single locations, a single variable, or it can be a much more complex, hurricane-driven contract or across 100,000 locations. But the underlying mechanisms are very similar in terms of how you build up to a view on risk. And then the last stage is, okay, well, I have this one risk, but I also have other risks. How do I incorporate the diversification? So that's how we go about underwriting a particular risk or product.
Yeah, I want to touch a little bit later about risk and how you work, as you mentioned earlier, carrier reinsurance, underwriting, your recent partnership with Beasley, all that stuff. But kind of something that you already started talking. You started your career with JP Morgan, you were at Quant, commodities. So you're already coming in with that experience of, let's say, more complex algorithms. When was the point that you kind of like you had that aha moment? It's time to leave my cushion position at JP and kind of like start a startup, and not just a startup in insurance.
Yeah, I left Citadel was my last role.
Oh, and, Citadel, sorry.
Yeah, on the commodities side, it was a number of different things coming together. One of the things in commodities is you actually manage quite a bit of weather risk, right?
Mm-hmm.
Whether if you're natural gas, you're trading natural gas, you're basically saying, okay, well, if the winter is warm, people are going to heat their homes less. Or if you're trading crops, the chance of drought is always a risk you have to price in. But these risks were not easily transferable. You could trade a lot of commodities, but you can't trade the weather risks underlying them. So there was that component. I was quite involved in the satellite space outside of my job. And so there was a very evident trend towards far more insight you could get from existing satellite data, and then more and more was going out as well. And so a number of different threads came together. We were also quite involved in the blockchain space, which was a interesting underlying layer to think about in terms of how you tokenize these risks. And we actually started as a blockchain white paper, a very unusual start of this, which was a vision that only now is getting ready to come true, which is tokenizing this insurance risk. So a smart contract reads the weather data and makes a payout. The regulatory structures and others were not really ready that early on. So by putting it all together, there was a vision of how you can make this a scalable business. Parametric, when we started, was a very sporadic, structured contracts between large companies or a few small pilots. And the question was, you can't get a real product going unless you can really build distribution. And so that moment was basically like, okay, well, let's start with a particular group of risks that is very hard to manage. Let's say farm risks in the Midwest of the US, an area we knew well. I traded the grains and livestock for a long time. And so it's that combination of saying, okay, there is a problem here. I also like something goes off in me when I hear a critique that is not current. So whenever you talk to about parametric insurance to anybody in insurance back in 2018, everybody talked about basis risk. Well, the data is not great, and basis risk meaning the loss that you pay versus the actual loss. But to me, that was a very old critique. That was a stale critique. And a lot of ideas come about because people's minds are still on a critique of a process that was 10 years old, whereas new advances are happening underneath that are going unnoticed. So data was getting better. You didn't need to have that much basis risk. On the flip side, a traditional policy might have tons of basis risk. The insurer might just deny your claim. You don't know how much you'll get paid. You don't know when you'll get paid. And so that, and then the biggest part is, how do I get a real team together? So once all those components seem to kind of line up, and this needed a lot of different talent pools to come together. Mine, my co-founders, and others who brought in technology, capital markets expertise, insurance expertise, because it's a very it's complicated to start an insurance startup. It's not an easy industry. It has a lot of barriers to entry, and so needed a really solid team to come together. So all of those coming together was the spark to say, okay, it's time to make an attempt here.
Now, I think that one of the hardest thing in insurance is to actually find the right team. I wish I can provide more information on that, but let's say it this way. From all the different companies and startups that I've been working with, actually almost every startup, the earlier it is, and that's also valid for insurance. If it's an early startup, great idea, wonderful, but the only thing that you have going for is the founding team. As you progress, great, let's talk about other KPIs and financial results, etc., etc. But to make life more difficult when it comes to insurance, it's wonderful that you have a great team. That great team needs to have someone who knows insurance, because it's not an industry that you can know unless you are selling technology to insurance. And then I really want to see if you know how to talk to insurance companies and understand the sales cycle. But that's something completely different. And still, you should have someone that was in an insurance company, especially if you're selling to an insurance company. And that's not simple. Let's continue a little bit more with the Insurance 101. Gap insurance. We kind of touched about a little bit, and it's a direct continuation for the Parametric. What is gap insurance? And then we'll talk about other interesting topics like reinsurance and how the hell you started to have all the different in the organization.
Yeah, in our case, gap it's not particularly exactly gap insurance as its traditional product. It's more looking at a particular situation and saying, okay, there's a gap in coverage, right? So for a farmer, it might be that, I'm producing here, but insurance doesn't start till here. The federal government, huge deductible, essentially. Or in various property markets, you've seen like in coastal areas, with hurricane-prone areas, you have insurance on paper, but what you actually have is a yearly reducing coverage. More limits, more deductibles, more exclusions. And so the goal of Parametric is really to say, okay, can we reduce that burden by having simple endorsements and other contracts on top, so that someone can get paid, like let's say there is a hurricane, can we at least get the customers getting paid quickly and transparently so they can start rebuilding, while maybe the standard insurance check takes its time to come back.
So basically, let's see, and is it in terms of legal and all the stuff, can you pay can you cover the deductible or the gap to you can, and then you can pay it quicker so they can start rebuilding until the carrier, the traditional carrier, can pay the entire amount that needs to remedy the damage. Okay, perfect. Okay, let's move to, I would say, content use. You start at MJ, then you have your agency, carrier, working with Beasley with capacity, so a little bit of reinsurance. How, different type of capital at the end of the day, right? Is underwriting, keeping the premium. In a second, you'll tell me you're also a reciprocal. I don't know, I'm just throwing it out there. What are the different structures that you have, and how did you reach a point that say, that's how we should do that, because it improves my margins, having more control on the risk and the reward? Yeah. What was the journey for you?
It looks extremely sprawling, but it was definitely all very organically and not necessarily always planned from the start. The overarching plan was that we are in a lot of these more fringe areas of insurance. It's difficult for incumbents for a reason, so in such areas, the importance to us was vertical integration. How do we connect the customer to capital with as few intermediary steps as possible? You need intermediary steps. It is insurance after all. But how much of that can we control? Because that gives us control over product, makes us more nimble with new products, makes us more nimble with underwriting, and it allows us to understand the full cycle of a policy from the minute it's originated from a customer, which then touches our MGA, all the way to the MGU, which is interfacing with capital market. One of the big differentiators with us was a very deep expertise in capital markets. And one of the things that we differ than your standard InsurTech is a bunch of our capacity comes from Wall Street and like alternative capital entities. And they speak a different language essentially, and they look at risk very differently. And we are able to seamlessly talk to reinsurers and alternative capital and get them different kinds of risks they like. They actually don't like the same kinds of risk generally. So it also works to take a risk, and certain parts of it may be more palatable to your traditional reinsurers and certain parts may be more palatable to Wall Street entities. And now we have a number of different ones that support us on both sides of the fence. But the progression was start with simple parametric contracts, then go more complex parametric contract, more complex solutions like in energy markets, then start doing parametric reinsurance, which then led us to interface with property carriers, where parametric reinsurance allows you to do the portfolio and can reduce the basis risk because it's not 1 point, it's 100,000 points, or 50,000 points of risk. That then led us to say, okay, well, we think that there's value in the carrier business, and then we have MGA's carrier and the reinsurance structure kind of chained together. And so we ended up acquiring a carrier in early 2024 called Centuri as another piece of that puzzle. And what we have done with the carrier is, not just the parametric side, but the operational stack. It has a lot more AI co-piloting, all in-house built and in an integrated fashion rather than piecemeal vendors. Almost everything is built in-house here. So that has allowed us to really chain together that customer to capital journey as best we can. And we continue on that journey to make sure that we can then deliver the right product. If you're just capital sitting 7 intermediaries away from the customer, it is going to be difficult to be innovative on product. Doesn't mean it's not possible, but it is going to be difficult. We innovate on product very fast. We make changes as we get feedback.
Yeah, I love it. It's starting from the new product, understanding the distribution, and we hardly talk about the distribution. We talked more about the integration, the risk integration, the vertical there, and then realizing that you need to also sell traditional insurance in order to complete it to your original product, which is the parametric, kind of the futuristic, which is today. Everything in the next week, Anthropic will announce something else, and then we'll be in a new future. And then
and we try to be part of the whole ecosystem now. So we have hybrid products that are part parametric, part traditional, because the end goal isn't parametric or AI or any of it, right? The end goal is how are we getting the customer actually what they want? They don't really care in what format or what technology is being used. They want to make sure that they'll get paid when there's a loss and that there will be capital behind it. And to do that, you have to be creative and not be ideological about it. So long ago, we stopped being just parametric because that has its limits. Not every market is ready to be purely parametric. We don't have sensors everywhere. We don't have data coming from every part, right? But you can have parts of the risk that may be difficult for the traditional insurance markets to serve as parametric. And other parts where the traditional insurance actually works pretty well to be traditional products, and we hybridize it, where it's applicable.
Well, it's niche at the end of the day. Also, in terms of building your company, you want to make sure that the market, the size of the market that you're operating in, is growing. Parametric, with all due respect, great technology, great idea. You remove the claim process in terms of the cost, which can be between, at best, it will be only 20%, but let's assume it. There are companies that the operation cost there will be 30, if not even 40. And you're just removing that stock. And now you can talk about not the loss ratio. Well, MJ, yeah, but carrier, now it's a new combined ratio, which is way more improved for you and what you're going to sell. Yeah.
And our carrier writes traditional as well, where we have brought down the loss ratios as well through reduced cost using a lot of different AI agentic workflows to reduce that cost of operation, even though it's traditional. But I will say the other aspect of Parametric that gets often missed is that it is a very interesting bridge into alternative capital, right?
Because okay, tell us more.
Because if you take a step back and think about what the problem with traditional insurance is on the claim side, it's that, well, yeah, there'll be a human element. It will take a while to settle, and we will maybe have possibly lawsuits and other unmodelable factors, or at least very difficult to model factors. If you're not a traditional reinsurer who's used to that, that is a difficult risk to model for an alternative capital player as well, right? Well, I might not get my capital return for a year or 2 years plus, who knows? And oh, by the way, there might be a bunch of other risks than just hurricane risk or just rainfall risk here to consider. Parametric solves that issue by keeping the risk very simple, or at least singular, and getting that settlement quickly so they can get their capital back, right? That allows new forms of capital to enter the insurance markets that previously would have said, well, it's just too complicated to wait for these long settlements and long, processes that we don't really know how to even model it. And so Parametric, beyond this, the cost reduction, and that was something that we were very, early to recognize, was that it was a bridge to new forms of capital coming into insurance.
Well, most of the people think about, okay, what's the form of capital market or capital that goes in? It will be, ILS, some sort of a bond, and then you'll have one of the markets, Lloyd's market or someone else. That, or you do something via an SPV in the Cayman or Bermuda. That's kind of narrowing it down or simplifying it. How do so now you're opening it up, and we kind of touch about it and saying, oh, we actually have crypto, but not shit coins. We're talking about a way to introduce liquidity, which we need to be careful because regulators here in the US don't really like to hear the word liquidity and insurance. So need to be careful on that. So to simplify, what's the alternative capital that Parametric helps? Go ahead.
It's a mix of these guys, right? So anybody who doesn't have a credit rating, who doesn't want capital trapped, anybody of that ilk, and that could be a tokenized fund, it could be a hedge fund, it could be even an ILS fund. Anyone who doesn't want their capital trapped for an uncertain amount of time past the risk period ending will benefit from Parametric. Because especially as interest rates are higher and there's other opportunities to reinvest the cash, right? There's always a better outcome and a lower price if you can shorten that window. And so some of them may be okay with traditional reinsurance investing, but they will offer you a better price if their collateral is not tied up for an extra year, as an example.
What was it? We had that, non-fungible NFTs, right?
Yep.
Yeah. So it started at the beginning, I don't know, it's kind of a great, technology-wise, great concept. And then there was all the tokenization and the NFTs for the different artworks, and then a lot of bullshit and kind of things that maybe that's a way that all kinds of less nice individuals are used to launder money. But in general, that completely makes sense that you have an NFT and that's a trigger to pay a policy.
Absolutely. So why it's taken this long from our very original concept when we actually didn't know much about insurance when we wrote it. Sometimes that's helpful to not actually be an insider. We just were thinking really outside the box. That mechanism is getting closer to regulatory clarity and allow for more institutional participation. And you have seen that in a lot of other areas. You've seen it in mortgage loans now with Figure, right? You've seen it with BlackRock and many large institutions participating in tokenized transactions of other assets. So I'm not, and we have been in this for a long time. We've been quietly building in the back the infrastructure needed for it. And I think we are getting much closer to a true realization of the benefits that can come from it. It's not unusual for a new market to always have unsavory developments because it's new and nobody knows what's going on and there's no regulatory clarity. I think even the US is going much more clear now in what exactly is allowed, what's not allowed. And that was the biggest problem with token markets, right? Was that you actually didn't know if you were breaking the rules. And that's why we didn't really push ahead on the operationalizing of it much until we were sure we actually know what are the actual correct and incorrect ways to do it.
Well, there are two things to say here. First of all, let's call it criminals or less savory activities usually are driven by greed, and greed is a very powerful incentive to move things forward from technology to anything else. Back in the day, you said, the internet and the bandwidth, broadband started because of porn or something like that, and that demand, and maybe yes, maybe no, I don't know. But most definitely, it's something that was a force. Having said that, insurance and finance, highly regulated industries, you can wait, you can write the white papers, you need to put it on a very low shelf so you can quickly pull it off the shelf, but wait for the regulators. And it takes them time because there is a great reason why you have regulation, not all regulation, right? And number one is to protect the public. Now,
exactly.
How to protect it? Are you overprotecting? That's a different conversation that we are not going to have today as a FINRA member, blah, 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 blah. So we need to be super careful on those things. The other that you mentioned, BlackRock is getting in and they have the power and the money to pay lobbyists to influence regulation, and BlackRock and KKR and the rest of the big ones, they have so much money that now they have a problem where to invest. They need new industries to invest in. So most definitely, if that will happen, that will give them a new venue to invest in and start deploying money that I have no idea where it sits. Now, it's great, but of course, as always, we are getting into a certain rabbit hole that we should go back up and talk about insurance and other things. What else? So you've been working. I think that you raised about 69 million so far for the operation. Is that only for operation, or is that part of also the surplus, or combination of?
Some of it is part of the surplus. Most of it is operations.
The people, by the way, when you talk with you have big names that behind you and supporting you. When you work with the different investor, and that's something that comes back and forth, that kind of educate the different startups that I work with. Different investors, different type of capital. How do you have the conversation? I need surplus money, regulated money versus we need money, venture money.
Yeah, we always are very transparent about it. So when we raised it, it was clear that this much will go as surplus, and part of it is just, to me, that is all just kind of understanding and conveying the return on capital that we see. We invest this much in surplus, but then that allows us to write this much in premium, which then allows us to generate this much return on that capital. And if that makes sense, great use of capital, which so far it has been. But the vast majority of it was used for just growing our technology stack, for growing our distribution stack in the various markets we operate in.
Now, before we reach the end of the episode, and I'll ask you the question that I ask everyone, we didn't talk about distribution. And that's usually the major thing. In my opinion, especially when it comes to InsurTech, do you have distribution or you don't have distribution? Later on, we'll figure out the loss ratio and all the other things.
Yep.
Can you sell insurance? That's number one. How did you approach it?
We had to be very, very creative and very brute force in the early days, because Parametric was not something even most of the big brokers knew about, or at least they imagined it to be a much smaller market than we imagined it to be. So there wasn't a lot of interest in sort of pursuing that at that time.
A lot of education.
A lot of webinars, going directly to the retail brokers, and in many cases to the customers themselves, and saying, okay, this is how, especially the larger ones, like doing a lot of teach-in sessions with customers. Also using other channels like embedded Parametric, which we do in the agricultural space, and in other cases, direct relationships that we might have had with, say, energy companies or carriers. It was pretty much anything goes. Let's find distribution. Could be wholesale brokers, could be just calling retail brokers every single day, could be some large customers that we directly deal with. Let's start an embedded program in this market. It's no one answer, and we almost, to this day, we basically explore almost every possible venue, because distribution, as you said, it is what differentiates you. And in the parametric side, distribution is easier if you're like for example, our carrier does home insurance. It's not easy, but certainly easier, because it's a known product with a large set of brokers and agents who work with it. On Parametric, it's we're always hunting for agencies and others who might have done even one Parametric product before, so they at least are aware of what the concept is, and then showing them that, look, for your clients, this could actually be a great way to partner, and show them that this can hedge their risk.
Wonderful. So, my last question: what's the one thing that people don't talk about that should talk about more when it comes to climate risk?
That how varied it is, right? It's easy to sort of look at a newspaper and imagine that it's this monolith increasing global warming sort of trend, and that means that everywhere is getting warmer and all the storms are getting more intense everywhere. And what's often missed is how much year-to-year variation there is, and how many long different cycles you have to monitor, from the more commonly known like El Nino, La Nina stuff, but many other confounding factors. So even if there's a trend like this, and say temperature in some areas, even that's not that uniform. And within year to year, there's immense amount of variation. So that also brings opportunity, because it's what causes a lot more volatility of outcomes, and which causes a lot more demand for insurance. But that how complex and regionally varied and varied by peril it is, in terms of what climate risk as a concept is.
That's perfect. That's a great answer. I always use the example of, like, think about Champagne or Upper Nile, the capital of Champagne region. It becomes warmer. There are years that it becomes warmer, and as a result, surprisingly, the English sparkling wine and the Swiss sparkling wine are getting better and better.
Yep.
And they're actually surprisingly good.
Yep.
On the other side, yeah. So think about it this way. Not everything is that you need to know how to adjust to the fluctuation and put your focus where the positive, but be very careful of where's the negative. Awesome. Great. Sid, it was a pleasure hosting you on the InsurTech Talk. Thank you very much for your time and knowledge.
Thank you for having me here. Appreciate it.
My pleasure.